What if I told you that 90% of traders are systematically programmed to miss the biggest opportunities in the market? Have you ever watched in agony as a stock you sold for a quick 15% profit continued climbing to 200%, 300%, or even 500% gains? That sinking feeling in your stomach, that realization that you left life-changing money on the table, it's not just bad luck. It's the result of a fundamental misunderstanding about how real wealth is created in the markets. Think about it. What separates the legendary investors from everyone else isn't their ability to make frequent, profitable trades. It's their uncanny ability to identify massive, sustained price movements early, and then have the conviction to ride these waves as they transform into wealth-creating tsunamis. While most traders obsess over daily fluctuations, chasing the small jiggles and celebrating modest wins, the truly successful are positioning themselves for explosive trends that actually build fortunes. Has this ever happened to you? You spot a promising asset, you buy in, and when it rises just enough to give you that dopamine hit of a quick profit, you sell. You feel smart and disciplined until weeks or months later when you watch in horror as that same asset continues climbing to heights that would have multiplied your initial investment many times over. This isn't a coincidence. It's a pattern that destroys more trading accounts than any market crash ever could. The truth is, the conventional wisdom about trading, taking quick profits, strict stop losses, and constant portfolio turnover, is actually training you to fail. It's conditioning you to focus precisely on the wrong things. While you're celebrating those frequent small wins, you're systematically preventing yourself from capturing the moves that actually create life-changing wealth. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Stay with me until the end of this video, because what you're about to discover might completely transform how you approach the markets. I'm going to show you a simple yet powerful method to identify mega trends from their very first move, before the masses pile in and drive prices exponentially higher. This isn't about complicated technical indicators or expensive software. It doesn't require you to quit your day job to stare at charts all day. What it does require is something much rarer in today's fast-paced market environment: the ability to distinguish between meaningless market noise and genuine, powerful momentum. Imagine being able to look at a chart and instantly recognize whether you're seeing a temporary price bump or the beginning stages of a move that could multiply your capital many times over. This skill, being able to read the present with a clarity that most traders never develop, is the foundation of consistently profitable trading. The question isn't whether these explosive trends exist. They happen all the time across every market and asset class. The real question is, will you be ready to capture them when they appear? Or will you continue to miss these life-changing opportunities when they emerge right before your eyes? Here's the hidden truth: most traders never discover the real enemy isn't market volatility, unpredictable news events, or even sophisticated algorithms working against you. The true nemesis that silently destroys trading accounts is much closer to home: it's impatience. This destructive force operates deep within our psychology, hardwired through millions of years of evolution to prioritize immediate rewards over delayed gratification. When applied to trading, this instinct becomes catastrophic. Think about the transformation that occurs the moment you enter a trade. Before you had skin in the game, you could analyze charts objectively, develop sound strategies, and make rational decisions. But the second your capital is at risk, something fascinating happens in your brain. Each price fluctuation becomes personal. Every red candle triggers that primal fight-or-flight response, And in these crucial moments, impatience whispers seductively, "Take the profit now. Who knows what tomorrow brings?" If you want to master the art of identifying explosive market trends like these, hit that subscribe button now. I share these market insights exclusively with subscribers who understand that catching big waves creates more wealth than chasing daily ripples. Behind the scenes of every failed trading journey lies this same pattern. The trader identifies a promising asset, makes an entry, sees a modest gain, and exits, celebrating a quick win while unknowingly sacrificing exponential returns. This isn't a minor mistake. It's a fundamental mindset error that creates an insurmountable obstacle to building serious wealth. What's particularly devastating about this impatience trap is how it masquerades as prudence. You can't go broke taking profits, they say. But this conventional wisdom contains a profound misunderstanding of how markets actually generate wealth. The path to substantial returns is never linear. It's filled with moments of doubt, periods of stagnation, and frightening pullbacks that test your resolve. The journey toward trading mastery begins with a crucial revelation: developing the ability to distinguish between meaningless market noise and genuine momentum. This elite skill doesn't require an economics degree or advanced technical knowledge. What it demands is something far rarer: the clarity to see patterns that others miss and the discipline to act accordingly. Consider how the markets communicate. Every price movement tells a story, but most traders never learn to read this language fluently. They react to headlines, chase momentum after it's obvious to everyone, and panic sell at the first sign of weakness. Meanwhile, the consistent wealth builders are operating on a different level entirely, recognizing the subtle footprints of accumulation long before the masses pile in. This perceptual shift represents one of the most profound decisions you can make as a trader. Rather than treating every price wiggle as meaningful, you develop filters that separate signal from noise. You begin to recognize that markets breathe. They inhale and exhale naturally, and these rhythmic movements create the very opportunities that the impatient miss. The impact of mastering this distinction extends far beyond individual trades. It reshapes your entire relationship with the markets. You stop seeing trading as a series of isolated bets and start recognizing the broader patterns: the gathering momentum, the quiet accumulation phases, the subtle shifts in volume that telegraph major moves before they become apparent to average participants. Now, I want to go even deeper into this topic by exploring how conviction plays a crucial role in riding these explosive trends once you've identified them, because spotting a promising setup is just the beginning. The real challenge comes in having the emotional fortitude to stay with that trend as it develops. If you've ever found yourself selling a position far too early and watching in frustration as it continued climbing without, you write "patience pays" in the comments below. The transformation that occurs in your trading journey isn't just about identifying opportunities, it's about developing the emotional resilience to actually capitalize on them. Here's the watershed moment that most traders never reach. Spotting a promising trend is merely the beginning. The real challenge, the one that separates the average from the exceptional, is having the conviction to stay with that trend once you've found it. Think about the psychology at play when you're in a position that's moving in your favor. With each increase in profit, there's a growing voice inside urging you to lock in those gains. "You've made a good return already," it whispers. "Why risk losing it?" This internal dialogue intensifies with every price fluctuation, creating a nearly irresistible pull toward premature exit. The revelation that changed my own trading journey was understanding that this isn't a market problem. It's a mindset challenge. Behind the scenes of every significant wealth-building trade lies this uncomfortable truth: the path to substantial gains is never linear. It's filled with moments of doubt, periods of stagnation, and frightening pullbacks that test your resolve. Yet those who embrace this reality, rather than fighting against it, discover a profound secret. Uncertainty isn't your enemy. It's the very source of opportunity. Most traders exit too early, not because their analysis was flawed or their timing was wrong, but simply because they lack the emotional fortitude to ride the natural ebbs and flows that come with every significant market move. They make the fatal decision to cut positions short during perfectly normal corrections, mistaking temporary weakness for trend failure. This brings us to another crucial revelation that completely shifted my perspective. The market is always right, always. It doesn't care about your opinions, your hopes, or your fears. It moves according to its own internal dynamics, a complex interplay of countless forces that no single individual can fully control or predict. The traders who argue with the market, who insist that prices should move differently, are fighting a battle they cannot win. If this perspective on market trends resonated with your own trading experience, hit the like button. It helps more traders discover these concepts and build our community of strategic investors. The hidden truth that separates consistently profitable traders from the perpetually struggling is this: instead of trying to bend the market to your will, you must align yourself with its momentum. This isn't about surrendering your analysis or becoming passive, quite the opposite. It's about developing the wisdom to recognize reality as it is, not as you wish it to be. When you see a clear trend developing, you position yourself alongside it rather than against it. You become like a surfer who understands that fighting the ocean's power is futile, but riding its waves can carry you further than you could ever go by swimming alone. The impact of this mental shift cannot be overstated. Once you stop battling the market and start moving in harmony with it, trading becomes less stressful and more profitable. The journey toward this alignment requires a fundamental recalibration of how you process market information. Instead of seeing price movements as personal victories or defeats, you begin to view them as valuable data points that inform your decisions. You develop the rare ability to separate your ego from your analysis, allowing you to adapt fluidly as conditions change. Now, I want to go even deeper into this topic by exploring a paradigm shift that forever changed my approach to market timing. For years, I was obsessed with trying to buy at the absolute bottom and sell at the perfect top, a pursuit that actually prevented me from capturing the most profitable portions of major trends. If you've experienced that profound shift from fighting against the market to flowing with it, write "alignment is power" in the comments below. For years, I was obsessed with what I now recognize as a dangerous illusion in trading, the pursuit of perfect timing. I believed that trading mastery meant buying at the absolute bottom and selling at the precise top. I spent countless hours developing complex systems and indicators, all designed to identify these exact turning points. This perfectionist mindset wasn't just ineffective. It was actively preventing me from capturing the most significant opportunities. The watershed moment in my journey came when I embraced a fundamental truth that completely transformed my results. The real money isn't made at the extreme ends of a price movement. It's made in what I call the fat, juicy middle, that substantial portion of a trend where the direction is clear and the momentum is strong. This revelation liberated me from the paralysis of trying to time markets perfectly. Think about it like this. Imagine a train leaving the station. At first it moves slowly, gradually gathering momentum. Eventually, it reaches cruising speed, moving powerfully and consistently forward. Then, as it approaches its destination, it begins to slow. The genius strategy isn't trying to jump on while it's still at the platform, too risky, or waiting until it's nearly stopped, too late. The optimal approach is to board when the train is clearly moving in a defined direction, but still has most of its journey ahead. Behind the scenes of every successful trade is this counterintuitive wisdom. You don't need to be perfect. You just need to be present for the most profitable part of the move. This mindset shift doesn't just change your entries and exits. It transforms your entire relationship with the markets. Instead of the constant stress of trying to predict exact turning points, you develop the confidence to identify strong trends and position yourself accordingly. This connects directly to another powerful revelation that completely changed my decision-making process. Many traders operate under a dangerous illusion that they can achieve complete certainty before taking action. They want guarantees and assurances. They want the market to promise them it's the right time to enter. But here's the uncomfortable truth. The market never provides such certainty, ever. The hidden reality of markets is that by the time absolute clarity arrives, when all indicators are aligned, when the trend is obvious to everyone, when financial media is trumpeting the opportunity, the most profitable portion of the move has already passed. This creates a profound paradox. Waiting for perfect certainty guarantees you'll miss the most significant opportunities. The journey toward mastery begins when you realize that uncertainty isn't an obstacle to overcome. It's actually the very foundation of opportunity. Without uncertainty, there would be no mispriced assets, no divergent opinions, no profit potential whatsoever. Your edge comes not from eliminating uncertainty, but from becoming more comfortable operating within it than your competitors. This transformation in thinking represents a fundamental shift in how you perceive risk, opportunity, and your own relationship with markets. It moves you from a mindset of prediction to one of adaptation, from rigidity to fluidity, from fear to strategic action. The decision to embrace imperfection, both in timing and in information, creates a psychological freedom that paradoxically improves performance. Now, I want to explore how these principles translate into a practical framework for identifying those explosive trends while they still have substantial room to run, and why patience might be the most underrated skill in a trader's arsenal. If you've been struggling with trying to time markets perfectly rather than focusing on capturing the substantial middle of trends, type middle path trader in the comments below. The most counterintuitive revelation that transformed my trading journey was realizing that the biggest profits don't come from constant activity. They come from patience. We live in a culture that celebrates busyness, that equates action with progress. The trading world amplifies this misconception tenfold. We're bombarded with real-time data, breaking news, and platforms designed to make trading as frictionless as possible. The underlying message is clear: trade more to make more. But behind the scenes of truly successful trading lies an uncomfortable truth. The most profitable periods often involve doing nothing at all. Once you've identified a powerful trend and positioned yourself correctly, your greatest edge becomes your ability to sit still while that trend develops. This patient inaction, this deliberate stillness, runs counter to our psychological wiring. It creates a profound internal conflict that most traders never resolve. The transformation happens when you realize that trading isn't about keeping busy. It's about being right, and then having the discipline to let that rightness compound over time. Some of my most profitable trades weren't the result of clever entries or perfect timing. They came from simply refusing to exit positions that were working exactly as anticipated. Think about this. Have you ever sold a position for a quick 15% gain only to watch it continue climbing to 50%, 100% or more? That wasn't a failure of analysis, it was a failure of patience. The intellectual journey from understanding this concept to embodying it represents one of the most challenging aspects of trading psychology. It requires a fundamental rewiring of how you perceive activity and progress. The enlightenment comes when you recognize that sometimes the most powerful action you can take is no action at all. Now, this patience must be combined with another crucial dimension of market understanding, recognizing that markets never move in straight lines. Never. They advance, pull back, then advance again in a natural rhythm that tests both bulls and bears alike. These fluctuations aren't random noise, they're intrinsic to how markets function. Every significant trend will experience periods of consolidation and correction that shake out the timid, punish the impatient, and test the conviction of even the most committed traders. The market seems almost designed to separate you from your positions before the biggest moves occur. Developing the discernment to distinguish between a healthy correction and an actual reversal becomes a crucial skill in your evolution as a trader. A correction is the market taking a breath within a continuing trend. A reversal is the market changing its mind about direction. They may look similar in their early stages, but they lead to dramatically different outcomes. The hidden truth that changed my entire approach is this: most traders exit during perfectly normal corrections, mistaking temporary weakness for trend failure. They react to price action without context, making decisions based on emotion rather than analysis. When you understand that pullbacks are not just normal but necessary for healthy trend development, your entire relationship with market volatility transforms. Instead of fearing these retracements, you begin to anticipate them as natural pauses that ultimately strengthen the primary trend. This mindset shift doesn't happen overnight. It emerges through experience, through watching countless trends unfold, through the painful lessons of exiting too soon. Now, I want to explore how emotional resilience becomes the true determinant of trading success, more important than analytical brilliance or technical knowledge, and how this factor separates consistently profitable traders from those who struggle perpetually. If you've experienced the challenge of sitting through market corrections without abandoning your positions prematurely, type "diamond hands" in the comments below. For years, I believed that superior intelligence and analytical skills were the primary determinants of trading success. I studied complex indicators, devoured market theories, and built sophisticated analytical frameworks, all in pursuit of making smarter trading decisions. Then came a revelation that completely reshaped my understanding. Emotional resilience matters far more than raw intellect in determining your results in the markets. This insight wasn't immediately obvious. It emerged slowly through painful lessons and honest self-reflection about why certain trades succeeded while others failed. Consider this reality. During significant market movements, the greatest challenge isn't identifying the opportunity. It's maintaining your conviction when everything around you seems to be falling apart. It's holding steady when media headlines scream doom, when friends question your sanity, when your own internal voice whispers doubts. In these crucible moments, your intellectual prowess becomes almost irrelevant compared to your emotional fortitude. I've witnessed brilliant analysts, people with extraordinary minds and deep market understanding, fail spectacularly as traders, not because their analysis was flawed, but because they lacked the emotional resilience to act on that analysis when markets became volatile. The transformation happens when you realize that it's not your brain that makes you money. It's your stomach and your nerve. This represents a profound paradigm shift in how we approach trading development. Instead of exclusively focusing on analytical skills, successful traders deliberately cultivate emotional resilience, the ability to remain centered amidst chaos, to hold positions through turbulence, to maintain clarity when others panic. This inner strength becomes your most valuable asset in navigating explosive trends. Join our community of trend-focused traders by subscribing right now. These powerful strategies have transformed my own trading journey, and I'm committed to sharing them with serious investors who want to capture the moves that actually create wealth. Let's connect this to another powerful revelation that completely changed my trading journey: the concept of asymmetric risk-reward. Here's the liberating truth. You don't need to be right on every trade to be extraordinarily successful. In fact, you can be wrong more often than you're right and still generate substantial profits if you structure your approach correctly. The hidden mechanism behind this counterintuitive outcome is maintaining favorable risk-reward ratios. When you keep your losses small and allow your winners to run significantly, the mathematics of trading shift dramatically in your favor. Even with a modest 50% accuracy rate, you can build remarkable wealth if your winning trades generate substantially larger profits than your losing trades cost. This insight catalyzes a powerful mindset transformation. Rather than obsessing over being right on every trade, you focus on the quality of your decision-making process. You become less attached to individual outcomes and more committed to maintaining favorable risk-reward dynamics across your entire portfolio. Behind the scenes, this approach creates a psychological freedom that paradoxically improves performance. When you know a single loss can't significantly damage your capital, when you understand that your methodology doesn't require perfection to succeed, you trade with greater clarity and conviction. The journey toward implementing this approach reveals another dimension of trading psychology: the profound impact of position sizing on emotional resilience. By calibrating position sizes to ensure no single trade can cause catastrophic damage, you create the conditions for maintaining emotional equilibrium during market volatility. Now, I want to explore how explosive trends don't appear randomly, but develop from underlying conditions that gradually manifest in price action. If you know what to look for, the market speaks a complex, nuanced language that most participants never truly learn to interpret. If you've experienced the freedom that comes from focusing on risk-reward ratios rather than win rates, type "math beats emotion" in the comments below. The most profound shift in my trading journey came when I realized that explosive trends don't appear randomly. They develop from underlying conditions that gradually manifest in price action if you know what to look for. Think of markets as having their own language, a complex, nuanced dialogue that most participants never truly learn to interpret. Behind every price movement is a story being told about accumulation, distribution, supply, demand, and the subtle transfer of assets from weak hands to strong ones. The revelation comes when you realize this language can be learned, interpreted, and acted upon before the obvious moves occur. I spent years watching price action, not just trading it, but studying it like an anthropologist might observe a foreign culture. I wanted to understand the patterns, the rhythms, the hidden signals that telegraph major moves before they become apparent to the average participant. This immersive journey revealed something profound. The market speaks clearly to those patient enough to listen. Consider how institutional money moves into a position. It doesn't happen all at once. That would immediately drive prices higher, working against their own interests. Instead, these sophisticated players accumulate positions gradually, often using pullbacks as opportunities to add to their holdings. This creates distinctive footprints in price action: periods of accumulation, subtle changes in volume patterns, tests of support that hold despite bearish news. The transformation in your trading results begins when you shift from reacting to completed moves to recognizing the early stages of emerging trends. It's like learning to identify a storm forming on the horizon rather than waiting until it's directly overhead. The signs are there: increased volatility after a period of calm, expanding volumes on upward movements, resilience in the face of negative catalysts. But most traders never develop the discernment to recognize them. This observational skill doesn't come from theoretical knowledge alone. It emerges from dedicated screen time, from witnessing how real trends develop across different market environments. Let's connect this to another crucial dimension of trading success: having a clear, predetermined plan before entering any position. The hidden truth behind most trading failures isn't poor analysis. It's poor execution resulting from emotional decision-making. Markets are designed to trigger emotional responses. The volatility, uncertainty, and constant flow of conflicting information create the perfect conditions for psychological reactivity rather than strategic thinking. Found value in these insights about spotting mega trends early? Smash that like button to help this message reach other traders who might be struggling with the same challenges you've faced. Without a predetermined plan, you become vulnerable to these emotional currents, making decisions based on momentary feelings rather than sound strategy. The paradigm shift occurs when you recognize that successful trading isn't about reacting in the moment. It's about planning in advance. Before entering any position, you must know exactly how you'll respond, if things go right, if things go wrong, or if the market simply moves sideways. This methodical approach creates a psychological buffer between market events and your responses. Rather than asking, "What should I do now?" in the heat of the moment, you simply execute the plan you created when you were thinking clearly. This discipline transforms your trading from a series of emotional reactions into a structured implementation of strategic decisions. Now, I want to explore a principle that dramatically changed my perspective on market opportunities. There's a fundamental truth that separates consistently profitable traders from the perpetually struggling. The most significant profits don't come from following trends. They come from positioning yourself ahead of the crowd. If you've noticed how emotions tend to hijack your trading decisions when you don't have a clear plan in place, type planning. Prevents panic in the comments below. Consider this revelation that completely changed my approach to market opportunities. By the time a trend becomes obvious to most market participants, the most lucrative portion of the move has already occurred. The masses only recognize opportunities after they've been substantially developed, when the headlines are blaring, when everyone is talking about it, when the story has already been told. But at this point, the risk-reward equation has shifted dramatically against you. This insight sparked a profound transformation in my approach. Instead of waiting for confirmation from the majority, I began developing the courage to act on my own analysis, especially when it diverged from popular opinion. This path of independent thinking isn't easy. It requires intellectual honesty, conviction, and the resilience to stand apart from the herd. But behind the scenes of every significant market move is this undeniable pattern. Smart money accumulates. Positions early, the trend develops gradually, and only then does public awareness explode. The awakening moment comes when you realize that consensus is rarely profitable. The crowd's enthusiasm is often a lagging indicator, not a leading one. The newspaper headlines, the trending social media topics, the taxi driver offering stock tips. These are usually signals of a trend's maturation, not its inception. Developing this contrarian mindset doesn't mean blindly opposing popular opinion. Rather, it means learning to think independently, to trust your analysis, and to act with conviction when you identify opportunity, regardless of whether others see it. This journey toward positioning yourself ahead of the crowd connects directly to what may be the most liberating principle in all of trading. Focus on being right big when you are right, rather than trying to be right on every trade. Most traders operate under a fundamental misunderstanding. They believe profitability comes from a high percentage of winning trades. This pursuit of perfectionism creates a cascade of destructive behaviors: overtrading, premature exits, and the constant anxiety of trying to avoid any loss. Behind this mindset lies a devastating mathematical blind spot. The revelation that changed everything for me was understanding that trading success isn't about frequency. It's about magnitude. It's not how often you're right. It's how much you make when you're right versus how little you lose when you're wrong. This paradigm shift transforms your entire decision-making framework. Consider this: even the most legendary market operators throughout history rarely maintained win rates above 50%. What distinguished them wasn't accuracy. It was their ability to capitalize fully on their best insights while keeping losses small on their mistakes. They understood the profound truth that one great trade can compensate for dozens of small losses. This insight catalyzes a complete identity transformation as a trader. Instead of spreading yourself thin trying to catch every move, you focus your energy, attention, and capital on the highest conviction opportunities. Now, I want to explore how these principles converge to create a powerful distinction between what I call market ripples and waves, and why most traders spend their entire careers chasing the wrong one. If you've had that light bulb moment when you realize that trying to be right on every trade was actually preventing you from capturing the biggest opportunities, type quality over quantity in the comments below. The framework I've shared with you today isn't just theoretical. It's the distillation of hard-won wisdom that transformed my own trading journey from frustration to consistency. What fascinates me most is how these principles extend beyond trading into other areas of life. The ability to distinguish signal from noise, to act with conviction when opportunity presents itself, to maintain patience when everything around you screams for action. These are universal skills that create extraordinary results in any endeavor. I created this channel specifically for people like you, thoughtful individuals who understand that real success comes not from shortcuts or hacks, but from developing genuine mastery. Each week, I break down these transformative concepts into practical frameworks you can implement immediately in your own trading and investing journey. If you found value in today's exploration of how to identify mega trends from their first move, hit the subscribe button so we can continue this journey together. The community we're building here is focused on substance over noise, on meaningful insight over superficial tactics. I'd love to hear your thoughts in the comments, particularly if something in today's video sparked that moment of clarity for you. Just drop "Trend Hunter Awakened" in the comments if this message resonated with you today. Your perspective adds to our collective wisdom and helps others who are walking the same path. And if you found this conversation valuable, giving the video a like helps others discover these ideas too. It's a small action that ripples outward, just like the market trends we discussed. There's a video right here that explores how to maintain emotional discipline during market volatility, the perfect companion to today's discussion about identifying trends. Click and continue with me over there to discover how these principles work together to create a complete trading framework that can transform your results. Until next time, focus on the waves, not the ripples. The real opportunities are hiding in plain sight.